Good, good, good. I think we're good. I see it working there. Hey, welcome to the closing beat, everybody. That was my fault. I forgot to plug in the thing that sends the thing to you guys, and you can watch the thing, and so it didn't work. But it's Friday, so welcome to the closing beat, everybody. Happy Friday. We'll give that a shot and see if that looks better. Should be good. One chord, right? Just got to plug in the whole thing there. So that's good. Yeah, we look good. All right, so we're normally a little more refined than this, but this is the closing beat show that we do. It is Friday there, and welcome to our show. Enjoy what we have to offer. We're going to teach you some things today. We're financial advisors at Jazz Wealth, and we focus on teaching. We really like to teach, and so I try to share that with you guys on a daily basis, whether you're a customer or not. But if you're one of our customers, we do that on Fridays. Or on Thursdays for our customers there. And I'll hang out with you guys today if you want. I'll go through everything I've got. I'll answer some questions because President Trump is like one block away from my house right now until like 7 o'clock tonight or something. So there's just no way to get home. Everybody's hunkered down. They're not letting anybody come or go. So because of that, I've got time. Let's hang out. So let's take a look at the stock market today. Positive day, but if you were watching throughout the day, not amazing, right? It wasn't amazing like you would expect. I'm going to go over there. You can see the performance of everything there, but I'm just going to hop over to the charts. You can see that we finished off positive on the day for the S&P. We were down for a considerable amount of the day. If I go to the 5-minute chart, you can see that we were basically down all the way until the end of the day. 2 o'clock when we started to get a little bit of a rally to recover all the losses there. Looking sweet overall to finish, but it wasn't like a blast-off day that just left you feeling like there was a lot of strength out there. I don't know. I think that was a little bit tough for the markets. You got the NASDAQ back to the highs. That one was also down, went negative for just a little bit on the day, giving back all the day's losses. It was up over 200 points. Then it comes all the way back down, goes negative before turning positive again. Look, for the NASDAQ, it's those earnings that were yesterday. Apple, Amazon, and Facebook were the big ones. Alphabet reported as well. Apple did all the heavy lifting today, up over 10%. It is now officially the biggest company on the planet. And so there you go, 10% higher on the day. The problem is some of the other things in the NASDAQ, like Tesla, down 4% on the day. Comcast, which doesn't sound like it should be a drag, but down 2% on the day. And Gilead Sciences, which is that gap down. Did you see the buying early this morning that we talked about yesterday? You saw it. You saw it. Those ultimately dragged on the markets throughout the day, and so that took away everything that Apple had accomplished throughout the day. Not cool. If you look at the Dow there, you've got Apple, of course, one of the strong ones there leading the way, but unfortunately, you have other names in the mix that just held you back. Even UNH was still down about 1% on the day. And I'm actually going to do a class for customers. Not only are we going to talk about the Apple split and everything next week, but we're going to talk about the effect that it has on the Dow, because the United Healthcare today was about 13 points shaved off of the Dow, and I'm going to kind of teach you how that works and why people say things like that. So we'll do that next week for customers. Caterpillar weak on the day as well, and so those sort of names offset along with CVX. They didn't get the earnings they were hoping to. Those sort of things offset all the Apple gains, and it was just not good there for the Dow overall. As far as earnings go, interesting thing, I don't know if you care about this, but interesting thing there, 10% of all companies, just about 10% of all companies reporting have beat on earnings, they've beat on revenue, and they've beat on raised guidance, right? And that's sort of known as the holy grail in the earnings quarter. You can have a company that beats expectations on earnings, beats revenues, and raises their guidance going forward. Typically, it's a good thing overall. Being that we're about 10% of companies beating on earnings, revenue, and raising guidance, that's the best that we've had since 2006, actually. So in 2006, we had 11% of the companies at this very moment doing better, reporting the sort of 3 beats there. And so what's interesting is the stocks that have done that outperforming is something you want to take a look at there. So what I'm going to do, I'm going to share a small list with you here and kind of give you a little lesson. There you go. Here is a list of the companies that are in the S&P 500 that beat on earnings, as you can see over here. They beat on revenue. We gave the amount that they beat by. They raised their guidance, right? And they're in the S&P 500. So this is the list as of now. As you can see, if you look down at the bottom there, they are outperforming. The average gain on earnings day, 2%. The average of all other companies, 0.1%. So rapidly outpacing those companies that just basically either missed on earnings, were in line on revenue, whatever it may be. Kind of interesting there. Also, as a whole, these companies reported earnings that were down 64%, but it was still better than what was expected. So that's what's considered a beat there. Revenue was down 5%, but still better than expected overall. If you look through the list here, you've got only one real estate stock, or one utility in the mix here. Where'd it go? Where's the Duke Realty? So that's the one that we've been talking about there in terms of being in that category and performing the best overall. Not too bad, right? If you look through a little bit further, well, and to be fair, a lot of these, they report in August, right? So all these REITs and stuff, they're going to report in August anyways. But anyways, as you look through there, technology is going to dominate the space there overall. Healthcare, if you see the healthcare stocks, Whole Logic, and just look through Pfizer and things like that, they have the best average performance. 3.02% is the best average performance on earnings day in the healthcare sector. That's the best. It even beats technology overall. Now, these are the S&P 500 stocks. It's just some place that people like to look for swing trades, as we talked about last night in our Wine and Wealth class, or for investments in stocks that are clearly showing that they're doing better than the rest of them. And so people like to put together lists of these. I like to share them with you. These are just the ones in the S&P 500. I will share the entire list, which is about 87 names in our research sector there, which includes names, of course, that are not in the S&P, something you want to take a look at maybe. That would be cool. Hey, coming up, we've got... we're going to talk about watch lists, looking for extended stocks and building a watch list around that. That's going to be on our show here today. I will tease you just a little bit and hope that you'll go check out the videos down here for our FinTips videos today. We talked about the CARES Act expiring and your student loans. We did RMDs earlier in the week, and then we gave you a little tip right there. There it is, 4 facts to help you not go broke in retirement. I see it, unfortunately, a lot of it. I try to help it. I try to stop it, but I see a lot of it there. So hopefully you'll check that out. Next week, our Wine and Wealth class, we're going to talk about the Dow and the S&P, how they're built, how they're weighted, what the impact of Apple is going to be on the Dow, the good and the bad. We'll go through all of that there and kind of show you how people figure out different calculations. I've got a couple real simple tricks there to help you better understand what's going on with the Dow, so we'll do that. And in our research website, the membership site, if you're not a customer of Jazz, the research site you can join, we are going to cover the August statistics, more importantly, the first week in August, how that typically performs is something you probably want to check out if you're keeping an eye on the market. So we will cover that. That's all I got. Let's go to the sector breakdown here for you and move on through it. So sector-wise, here we go. Let's do it like this. It's Friday, right? Best performing sector of the week is going to be tech. That's largely because of today. REITs were the best performing sector of the week up until today when tech took the first place spot there. 5% gain for tech stocks on average this week. So you got 5% on the XLK is what I'm trying to say there. New 52-week highs looking good. The weakest sector of the week would be energy, and that's because Chevron, ExxonMobil, Phillips 66, they all did not have the earnings they were looking for. It was unfortunate. They needed it bad. Basic materials are going to be the second worst performing sector of the week, but not bad. If you take a look at this here, you just have a pullback inside of a strong sector. So if you're looking at material stocks, maybe something to consider there. It was only down 2% for the week, so don't let me scare you away there, but maybe something to take a look at there. And communication services comes in third place overall, 2% on the day or on the week. A lot of that being recovered, a lot of the pullback from earlier in the week being recovered from today. That's going to be Facebook because Facebook did well. There you go. Facebook new highs overall. So let's take a look here. The tech sector is currently the sector that has the most number of stocks that have beat on earnings. For example, Apple, right? That's hitting new highs because of it. For example, Amazon, right? So to give you a couple examples of that, the tech sector now up 20% year to date. If we look at the financials are the fifth from the last sector in terms of having stocks with the best beat rates there. Not good. It's still up 20% no, it's not up 20%. It was, you've got the tech financials there kind of just trading sideways right around the 50-day. Not good. Their earnings are largely done. And then add to that, after hours here, Capital One says, we're going to have to cut our dividend to just 10 cents a share. They were paying out 40 cents. Capital One just now announcing 10 cents is what they're going to cut it to. Oopsie. You got communication services, we just mentioned there. This is the second to last sector in terms of stocks that are beating on earnings. Not a very good representation of them. There's still a lot of them to report yet in there, but today you had Comcast overall. That was one of the weak links that we talked about early. I want to point out Twitter pulling back, not really getting anything going after that weak little breakout there. That was a tough one because remember we talked about that breakout happening on earnings, right, just before it. And so that's frustrating. It kind of ruins a pattern overall. And Google, or Alphabet, didn't participate in the excitement today. Came back down to the 50-day moving average, saw itself a little bit of a bounce there. Materials, by the way, is the second best sector in terms of stocks that are currently beating their earnings. So really starting to stand out. You got tech first, materials second, so looking pretty good there. It's nearing a 5% pullback, by the way, if you're interested in that. All right, number of new highs, new lows on the day. You've got 28 new highs on the day, right? So that's what you got going on there. Not really a lot there. I mean, obvious names. You saw the Apple, Facebook, QCOM even hit new highs there. Nothing really exciting to report to you there. Kansas City Southern was the best performing one there. Just an incredible little pop. Was up over 15% right before the end of the day. That's a railroad company. So not a whole lot to talk about there in terms of wrapping up the week. I think we can move on. The watch list for today, here's what we're looking for. We are looking for stocks that are already higher and are extended. So take a look at something like Kansas City Southern. It's extended, but it's just one day, right? So we're looking for stocks that are starting to roll away from their moving averages or in terms of being down. For example, AMD. We've already mentioned this one, so this is kind of our sample. So you've got a stock that's already up, gaps higher on earnings, and really extended. So our criteria today was show me any stock within what I can share with you that is at least double digits away from its 20-period moving average. Very simple thing to do is just say, I know where the 20-period moving average is. Show me every stock that's at least 10% higher, meaning the price is 10% higher there. AMD is one of them. Future brands, or Fortune brands, I always say future. Fortune brands there, already up, starting to get extended. Maybe not something that you're interested in a counter trend play now, but these are stocks to build a watch list, not to necessarily trade. That's why we call it the watch list section, right? So something to take a look at there. ISRG, more than double digits away from its 20-period moving average. It's a little extended. We know, and you know from the lessons here, stocks don't like to stay extended from that, the 20-period moving average. You got Pulte Homes in the mix as well. All home builders starting to kind of calm down after that breakout that we walked you through, so that's one of them. Rollins. You can just kind of see we're honing in on the same stocks. That's all I'm trying to do in this watch list section each day, hone in on a group of stocks, because if I can give you a few of them there, maybe you know one, you own one, and it helps you start to think about what you might want to do. Arista Networks there, up more than double digits from its 10-period moving average as well. And then finally, you've got Xilinx, which pulled back today, so this one kind of gets cut off the list if you ask me. It already started to pull back. This is what you're looking for, by the way, on all those stocks that are above that you see that are listed out. Got extended. People just wanted to take a profit overall on Xilinx, semiconductor stock that was weak on the day. So hopefully that helps you out. What we didn't want to do is have something like QCOM. So QCOM would be known as the beginning of a pattern. Why? Because it's a new technical pattern that triggered. It was a potential breakout. Earnings were good. Everybody got excited. They got the deal with Huawei. It broke out. Well, that's new excitement. What we're looking for, and why I put some of this stuff on the list, is you're looking for excitement that's already kind of fading away. Whatever happened here with the new breakout, it was great, everything was cool, probably had earnings, and now the interest is starting to fade away. The stock prices, volume is starting to fade away as well. So just something that I like to put together for you for a Friday. Let's take a look at the stocks in the news. Well, Apple, just a great quarter overall, biggest company on the planet. They're killing it. Beat on earnings, beat on revenue. You got the 4-for-1 stock split coming up. August 24th is when that's actually going to happen. iPhone revenue plus 24%, services revenue up 15%, total revenue up 14%. And when you're talking about those types of billions of dollars, 14% is no small chunk of change overall. Caterpillar gapping down here today. They had earnings as well. They beat on earnings, but Caterpillar said we expect to see continued weakening demand overall. That's not good because you think about Caterpillar in terms of infrastructure, global construction and things like that, even farming and things. And so if they're expecting weaker demand, that's a kind of a sign of manufacturing from a construction standpoint. Not looking good there for them. So the stock was lower. Shake Shack, weaker on the day, down 12% overall. They missed on earnings. Sales down 64% year over year. They got a little bit better in June, but ultimately they said, yeah, look, we were closed, right? You had some problems there. The virus got us. Johnson Controls hitting new highs, actually breaking out there. If you want to take a look at that pattern. A little bit of a breakout there on earnings. They also raised guidance as well. So Johnson Controls enjoying the benefit of those stocks raising guidance as well. One last one here. You got Deluxe Corp, right? This one is going into the S&P 600. So actually on August 3rd, next week, they'll be added into the S&P 600. They're taking the place of a company that got bought out, El Paso Electric. Rather interesting story if you care about that transaction. But you've got Deluxe Corp taking a place there and starting to find a bottom, right? So you're getting a little bit of that momentum. I know you guys like looking at these things where stocks are going to be added and you see the momentum and you want to try to play that sort of thing. And so if that helps you, you've also got Park National, that one's already up a little bit. That one's an old one, actually. What else do we got? Not Run. There you go. Yeah, some of these are already old ones. But anyways, Deluxe was the one I wanted to point out to you, so hopefully that helps you. And Microsoft got a little bounce there towards the end of the day, looking to buy the American business of TikTok. Does that make you trust the app? I don't know. I'll take your questions here in a second, but I'm going to read off a list of earnings on Monday. Got Clorox, Dish Networks, McKesson, Tyson, AIG, Ingersoll Rand, Clack, which is KLA Tencor, and Take-Two, going to report there as well. MetLife and Valero paying out dividends, and ConAgra paying out 21 cents overall. Let's see what you got here in terms of questions overall. Yeah, he's not here today. There's never been a successful virus vaccine, so who knows? Who knows? I'm guessing you're talking to somebody else. You like the Johnson controls there, a little spike today? Cool. Yeah. Yeah, Pinterest, killer move today, right? That's one of those that people got excited. Hey, they're making money. They're doing their thing, got good growth there, very strong earnings there. Yeah, I don't know. It's good, strong numbers. You've got some issues. There you go. You've got some issues back here at these highs around 36. If you're expecting any short-term area of resistance, a little ceiling overhead, that could be something you might want to check out. Yep. No reason to see Google drop after earnings. Revenue declined for the first time in history. Seems like a buy here. Hey, that's what makes a good market, right? For every buyer, there's got to be a seller somewhere. I love it. The other day you mentioned people moving to good dividend stocks. Are we in historical company dividend cuts like banks travel? So it makes sense rotating into good dividend stocks. That could be the reason why you see a bit of a crowded trade, right? So you have people that recognize not all dividend companies are right now successful paying dividend stocks. And so there's a smaller pool to choose from. That could be the reason we've seen that spike over the last 10 days. Good question. Yeah. I like it. What do you think of Citrix? They had good earnings, you're right, and have been falling maybe around the bottom. Just got rumored around $1 billion deal with Microsoft. So from the earnings move there, right, think about what happened to this stock. Just my opinion, this is really no fact or anything. I'm just looking at it. So an amazing move to the tune of triple-digit gains since about this time last year, staring at almost 100%, 85% there. So you got to imagine if everything isn't firing perfectly on all cylinders, or there's no hope for that too at the moment, you got to imagine a bit of a reset. Doesn't make it a bad stock, just means it's not worth $170, and that's what's clearly being indicated in the price there. Yep. You listened to the Waste Management earnings call last night. It sounded pretty good to me. I watched the Waste Management CEO talking on TV today, and he couldn't name off the percentage of revenue per segment of his business. Maybe he just had a bad day, right? Just a bad day. Yeah, Capital One cutting their dividend 10 cents versus 40 cents. I think it continues, right? I don't think that, I mean, we've certainly seen a crest in the number of companies, a peak in the number of companies that have done it, but, you know, I think, keep in mind, earnings are better than expected, but they're still terrible, right? It's like the GDP number yesterday. It was better than expected, but it's still one of the worst on records ever reported. There has to be some of that laying around in the backdrop there. With that in mind, yeah, you're right. Altria raising their dividends. Gave you a list of stocks that actually raised their dividends the other day. And that's still going on. I believe Costco as well. So, you know, there's still room for dividend stocks out there for those of you that like chasing that sort of thing. I like it. You like Intel for the discount? Well, I can't disagree with you that that isn't a discount. Yeah, they've been just pummeled here in the short term. Interestingly, when I was putting the list together of stocks that were double digits above their 20-period moving average, if you look for stocks that are below their moving averages by double digits, this is kind of one of the only ones. So yeah, very extended in the short term. Can you argue with it? You know, maybe buying a discount. I can't. Problem is, what are you buying? What's the reason you're buying it for? Just a pure discount? If not, how do you know that 43 is not a discount, right? So they've got at least a year before things catch up. They're delayed a year on those new chips. That seemed to be the main focus the other day. So, yeah, there you go. Well, I think that'll about do it there. I am going to just hang out for a while because I don't think I'm going home anytime soon. Mr. Trump taking up all the space by my house, and I appreciate you guys hanging out today. Thanks for putting up with us through all the little hiccups there in the beginning. We'll be back next week, do this all over again, and probably do an extra research video or two because I've got some good things that I think I could explain better versus type out. So if you're one of our research members, heads up for that. And remember, you can turn on the settings. So if you are a research member, you can actually just go in there and say, email me when there's a new post or email me when there's a new video. It's totally up to you. You can turn them off as well if you don't want those. And so there you go. Have a great rest of your day, and we'll see you next week.